So there's a lot of talk about the housing market and what's going to happen to the housing market going into 2021. This is September of 2020, right at the end, and we are going into 2021, and the economy is obviously, still not back, and there are a lot of real estate assets out there that are in forbearance. Some of them are in the default process and potentially going back to the lender on the commercial side. Not so much of a problem on the residential side. I mean, there's always foreclosures. There's always foreclosures. There's always defaults, kind of in any market cycle, good or bad. But right now, there are a lot of people taking advantage of forbearance. So, what is forbearance? That is basically a break. That's where anybody can raise their hand, call the bank, and just say, "Hey, I want to skip payments for a while." So you don't need to provide any documentation. You don't need any kind of a, you know, proof that you're facing any kind of hardship. You just need to, call the bank and tell them. Now, this is some lenders. Not every lender and every bank is operating this way, but the FHA, Fannie Mae, Freddie Mac, government-backed mortgage lenders are the ones that are mostly handling things this way, and some other lenders are as well. But you just call them up and just say, "Hey, I'd like to skip payments for a little while," and they'll give you 3 months, 6 months, maybe even a year, depending on the lender, to where you don't have to make any payments. So then what happens when you get to the end of that 3, 6, or 12-month period? Well, under the terms of the forbearance agreement is what you need to look at. So the forbearance agreement might say that you have to make a lump sum payment at the end of that term to catch everything up. And or the agreement might say they'll evaluate your financial situation at that point and to make a decision. Or it might just say if you can't repay, then there might be another solution, like adding those payments to the back of the loan, or spreading that lump sum out over a 12 or 24-month period where you pay a little extra. So there's a number of ways that the banks and lenders are going to handle that, that forbearance payment that has added up over that 3, 6, 12-month term, whatever it is that you got. But usually what the forbearance agreement will say is that it's due at the end of that period. And then once you get to the end of the period, then you might have to provide documentation to show your finances and that you did have a financial hardship due to COVID and things like that. And they're going to be pretty lenient. So even if you have some money in the bank, but you've lost your job, they might be lenient on that and say, "Well, we'll add this to the back of your loan and just kind of, negatively amortize your loan." In other words, they'll take all the interest and principal that you should have paid, or just the interest, and add that to the back of the loan, which increases your loan balance, which negatively amortizes the loan. So they may do that, or they may be willing to spread those payments out over a longer period of time. So that's really what forbearance is. The key is the lender. Every lender is different, and the forbearance agreement. Make sure that you read that thoroughly and you understand what the terms of that agreement are, and before you sign it, so that you know what's going to be required at the end of that forbearance period, so that you can make the right decision. And then, just make sure if you're doing that just so that you can build up some cash, which a lot of people are. A lot of people, maybe they own rental properties and they're going into forbearance just so they can, kind of pile up cash a little bit, maybe reinvest that cash and play in the market or whatever during that time period that those, payments are being allowed to be missed. You just need to be careful, and especially in the markets right now. You don't want to be putting any surplus cash in the markets right now, because they're just, nobody knows what the markets are going to do. But I can tell you that there's going to be some pain in the markets for the average retail investor before there's any significant long-term upside. So just be careful there. That's like gambling. You probably have better odds at the racetrack or at the casinos right now than you do in Wall Street. So be careful of that. So just understand that what the long-term impacts and implications are, and when and how you're going to have to pay that money back, because you will have to pay it back. Forbearance means it's a break, but it doesn't mean it's forgiven. Now, there will be some potential lenders that might forgive some of that, but most likely it's going to be negatively amortized at the end. And then you got to understand, what are your options there? If you are in a distress situation, what's your best solution there, and how do you get through that? So that's going to be up to the lender. They're all different, so just make sure you understand what the agreements say and what your options are.